Hello and welcome back to Bunnex Investment Group. In this video, I am going to teach you one of the simplest trading strategies that you can apply as a scalping method. So I'd love to call it powerful scalping strategy because it's basically in and out and not staying in the markets for too long. All right, so basically the time frame of observation is going to be M15 time frame, which is the 15 minutes time frame. All that you need is to put your chart like what you are seeing right now. So basically, this is not going to be necessary. So I'm going to remove it as well as this one. But the upper EMAs are going to be necessary. And to define them for those who do not follow this particular channel, this blue one is the 50 EMA, the white one is the 200 EMA, and then the red is 13, the yellow is the 5 EMA. All exponential moving averages with all those periods applied to close. All right, so basically what we need to see first is to see a crossover of the 50, 13, 50, 200 EMA. But we are not saying this crossover is going to give us any entry, but this crossover is actually to give us, it's going to give us a bias, right? Are we going to the upside or basically are we going to the downside? So basically, if we see a crossover like this one, we can know whether we are going to the upside or to the downside, or in this particular case, it's a down bias. This particular case, it's upward bias, basically like that. So in that instance, when we see that particular crossover, all that we now need to see is basically a shift and a pullback of the market. So we are saying it's crossover of the 50-200 EMA, and then after that crossover, we need to see the market pull back to the 50 EMA, which is the EMA in blue. So basically, in this case, we can see there was a crossover, then the market came back to the 50 EMA, like in this particular scenario. Let me zoom in. You can see crossover, the market came back to the 50 EMA, and then we had this candle closing above the 13 EMA. This is the point of entry, and our stop loss, we can put it right below the 50 or the 200 EMA like that, so that we have a wide reward to risk ratio. So basically, this was an entry point and the market actually went our direction. This is on Euro NZD, which is a pair that you can as well check as I am giving you these examples. So let's have more examples so that you fully comprehend where we are coming from. We can see here we had a crossover of the 50-200 EMA to the downside. It's actually a bias to the downside, and we had this attempted touch to the 50, and in some other brokers you'd find out that this was a touch, but due to spread, this was actually a different scenario. So we can say our entry was going to be below the candle close, which is at this particular price, stop loss above the 50, and then we actually see the market going our direction. But on that instance, we are saying you are not supposed to take two touches of the 50 in one particular direction when the 50-200 EMA cross have been issued. It's one touch of the 50 for each entry point. So here we can see another 250 EMA touch, retest of the 50, candle close above the 50, top loss below the 50, and then the market went our way like that. So basically, all that you'll be needing to see is a beautiful structure of the market. Is the market presenting what you are looking for? And if you can find that and do it over and over again, you'd find yourself having a high win rate, actually a positive return from the trading business. If you want to understand more and further, join in the top 1% traders course, which I have tried by all means to simplify that anyone who just knows how to read can trade and make profit out of this business. On that note, we've come to the end of our today's video. Thank you for watching, like and subscribe, and I'll see you in the next one.